Hi, Meg Hogan here. I wanted to have a talk about your financial statements. Do you really understand what's going on when they present you with a balance sheet, a profit and loss sheet, and hopefully a cash flow sheet or a statement? Now, a lot of owners will look at it and go, okay, balance sheet is something that I have, and that's my equity, and that's all I need to know. Okay, well and good. But if you're purchasing a business, you'd sort of want to really look at that because you're going to find out, is there debt there, is there equipment that's been put into there, or what exactly is in that balance sheet that applies to me when I'm buying a business. Your profit and loss, you know, that's the one that most business owners are really, really excited about because one, it says their turnover, two, it says their expenses, and then it says what's left over is the profit. And they go, yep, we made blah, blah this year and we're so excited, but we had so much turnover this year. Um, but the other one that's probably not so much in use and not so much where people focus on is their cash flow statement. If you're not even getting a cash flow statement, I'd really urge you to start looking into it. Even just with an Excel spreadsheet, just doing something month by month to see where your cash flow is going from your profit and loss, to see how much cash is actually derived and what's happening with that cash. I don't know if you know the statement, but cash flow is king. And when I say that, it means that it's the only true and factual number that's going to keep your business going. The rest of them are just a snapshot in time. Um, they're just, you know, you may have had that there, but guess what? Other things have come in and taken it away, and you can't always work out that where has that money all gone. It's like when you say at the end of the year on your profit and loss statement, you've had, $50,000 in profit. Yay! But you look at your bank account and there's only like 15,000 sitting in there, and you're going, but where's it gone? Where is it? And that's because this figure is a bit of a theory figure. It says, yes, you've made this particular profit and that's how much tax and so forth you're going to pay on that. But you've got things like loans that are going to jump in. You've got, the next month's expenses are even eating into that. You can't guarantee where that money is at any one point of time, except for to know that it's sort of gone by the time you get the information back on it. So the only real sheet that you should be really, really focused on is your cash flow sheet. Your cash flow statement is the one that's going to tell you whether you've got enough money in that bank to be able to source the next month, to source any new projects, to know when things are going to get really tight and you have to calm down and not spend so much, and just maybe you've got to lay off a few people just for the few months or whatever, or ask them to go on holidays or something like that, just to get you through until the money's back again. If you don't know where you are and the positioning of your business and how much money is going to be coming in for the next few months, it makes it very, very hard to work out whether your business is going to be sustainable, whether it's going to survive the next few years. Anyway, I've got a couple of examples. I just want to run through them. I don't know if you can see this one here. Now, this is from Keith Cunningham. Now, he's the rich dad part of Robert Kiyosaki's book, Rich Dad, Poor Dad. Now, I did some training with him just at a recent event, and it was just really, really good. It just he put it back into really baby steps of what everything was about. Now, if I can just get this into screen here. So it talks about your assets, and your assets are things that you have. This is on your balance sheet. So your assets you have, your liabilities, they're the things you owe, and then the equity is a balance between the two of them. And that's really all that figure comes down to. But the important thing to look at on this balance sheet is under assets, there's something called cash. Now that cash is what you have right there up to the point of when that was taken. The next one. This one here is basically a profit and loss. It's called an income statement on this page, but it's a profit and loss. So basically, you've got all your sales that happened and any of the profits that you made. It's got your income that came through, your depreciation, your expenses, and then the difference between the two is the net income. So basically, the profit and loss, sales, expenses, the difference between the two. Did you make a profit? Did you make a loss? So the one there to be having a look at there is to see that it's saying that we've got 17,200 that we made a profit of. Great. where is it? And that's where we come to the cash flow sheet. The cash flow, or what they call them, a cash statement here. So it breaks it down to a few things. You've got operational cash, you've got investing cash, and you've got bank financing cash. So out of those three, some of them may apply on your statement, some may not. So really what we're interested is in the operating cash that we've got there. And what we can see just on this example is he's 2,800 in the red. But hang on, we just said that we had $17,200 of profit. Exactly. That's a theory, a figure that's been taken at a point of time when, yes, you did, but cash is ever moving. It's changing. So at the point of time of also taking this, they have seen that through this example here, there's been some investment money that went out, and there's also had to have been a loan from the bank, equity and financing from the bank that has kept this 1,700 alive. Without the financing and so forth, this company's operating profit in cash is in the red. $2,800 is actually owing still. They don't have that money. They've pulled it out from investing cash and, financial cash. So when I say cash is king, this is the figure that you need to know. And this $1,700 there is actually the figure on our balance sheet, which says the assets cash right there is $1,700. Do you understand that, when we're looking at this, we're going, wow, but, we had so much money that was sort of $17,200. We did really well. But if you've only got $1,700 sitting in your bank, and now you know that it's come from financing and so forth, is your company healthy enough? What do you need to do besides have a really good discussion right then and there and start ringing your database to start making some money? But what else do you need to do? Is it innovation that you need to do? Is it just what is the thing that's going to make that turn around? All right, I'll catch you.